What is up guys, my name is Ignas, welcome back to the channel. Last week I've made a dividend comparison on 3 names from the medical devices industry. In case you are interested, I will leave a link for it in the description below. So after making it, I've picked one stock for the Revolut portfolio, and that is Medtronic, ticker symbol MDT. It is quite a large company, market cap is at $226 billion, and even though the share price is not doing great this year, minus 10.43% on the year to date, it is actually up in the last 5 years, higher for 13.93%. And as I have picked it for the dividend portfolio, the stock is currently trading at a dividend yield of 2.86%. So I do believe now is the right time to look into the name just a bit further. First we'll take financials and fundamental ratios, then where the analysts think the stock will be trading at next year. After that, what Superinvestors and insiders are doing with it. And lastly, we'll take the technicals of the price chart. Maybe this is a pick that you will also find interesting, so let's start. So first let's take Medtronic revenues, and this is the history for the last 5 years. In 2017 they were bringing $29.7 billion on the trailing 12 months. Then in a year in 2018 that increased to $29.95 billion. In 2019 it was over 30 billion at 30.6, but after that we saw a bit of a decline. The pandemic drop resulted in a minus 26% quarterly growth year over year, so the company brought just $6 billion for the quarter, adding up to $28.9 billion on the trailing 12 months. But that was turned back quickly, as 2 months in revenue came back to $7.6 billion for the quarter, and then in 3 more months, by the middle of 2021, we were already over the pre-pandemic highs, with $31.6 billion for the year. Now with the most recent quarter in, the 12 months revenue remains at 31.7, but it is consistently going higher compared to what we had just a few years back. Now second metric I want to check is the price to earnings. So back in 2017 the P/E ratio was at 25.56. Then in a year with the price going higher a bit and earnings moving lower, price to earnings went up to 35.58. In 2019 we saw earnings going back up, so price to earnings went lower to 29.23, and it pretty much remained right there to 2020, with the P/E ratio at 28.28. By the end of 2020, earnings saw this low of $2.13 per share, so that was where the price to earnings ratio peaked at 50.49. But after it, earnings kept going up. By the middle of 2021, price to earnings went a bit lower to 44.8, and this year with the price going lower, we now have the price to earnings at 25.52. So there were 2 times in the last 5 years where price to earnings was closer to 20. One was in the beginning of 2019, and then second by the end of 2017. But it seems that the price to earnings with under 30 could be considered fair of the last 5 years, and even more towards the discounted side. Now next step is shares outstanding. Back in 2017 they had the number of shares at 1.39 billion, then in a year in 2018 that decreased by 1.65% to 1.37 billion shares. In 2019 we saw another decrease to 1.36 billion shares. And then in 2020 a decrease of 0.52% to 1.35 billion shares. 2021 had us just a bit higher to 1.35, but with the latest quarter in, we are again going lower, now at 1.35 billion shares. So in the last 5 years Medtronic has been buying back shares. They did the most of it back in 2017 and 18, and in total now they bought around 40 million shares, which at the current price of around $100 per share is a buyback worth for almost $4 billion. Now let us check dividends. So back in 2017 Medtronic was trading at a dividend yield of 2.27%. Then in a year in 2018, as the dividend payout for the trailing 12 months decreased, the yield bottomed at 1.02%, but after that we pretty much saw steady growth. In 2019 the payout increased to $1.94, so the yield went up to 1.92%. In 2020 the payout was higher and the price went down, so we saw the dividend yield at 2.19%. And then with the price surging in 2021, the dividend yield did go lower to 1.84%. Though the dividend payout still moved up, And with the most recent quarter in, as the price is going lower, the dividend yield is now at 2.68%. So the dividend payout has been going up consistently in the last 5 years, and though we did see the stock trading with a dividend yield of under 2% for most of the time, it has been surging recently, and we are now pretty much at the highs of the last 5 years. To further check into the yield, we'll use my dividend investing watchlist on Google Sheets. So we are now in the watchlist, and here is the tab for Medtronic. This is the same dividend yield history for each quarter of the last 5 years, and out of it we calculated that on average in 5 years the stock was trading at a dividend yield of 2.03%. So the worst time to get in was back in 2018, where the dividend yield was 1.02%, under the 5-year average for 49.68%. But if we would be buying the stock right now, where the dividend yield is 2.86%, that is pretty much the highest of the last 5 years, up over the average for 41.09%. Now, if you would be interested in doing a similar analysis for yourself, you are able to access this watchlist by following the first link at the top of the description. Otherwise, feel free to add a ticker in a comment below, and I'll consider adding it into the watchlist myself. Maybe you could share some interesting opportunities in the market that I'm still missing. So we have checked into the history, but how about expectations? Where do analysts think Medtronic will be trading next year? Here we have information on price targets from 23 analysts. The targets range from the lows of $85 to the highs of $142 per share. On average, analysts expect that the stock will be going for $110.88, and it is currently trading at $95.19. This means that on average for next year, analysts predict that the stock should be going higher for 16.5%. Now let us take another angle. Here we have information on earnings estimates from 26 analysts, and on average they predict that next year Medtronic will be bringing $6.01 per share in earnings. So if we assume that the price-to-earnings ratio remains the same, then for next year we are looking to an increase for the share price of 8.1%. So overall, analysts are quite bullish on the stock, as they estimate that next year the price will be going up from 8 to 16%. Now let's check Superinvestors. I am quite surprised, but currently 6 funds are holding the stock. Unfortunately, only one of them added into their position, and 3 reduced on theirs. So Mears Power Growth Fund reduced their exposure by 1.65%, though still holding almost 1.5 million shares. Then Poland Capital Management reduced their position by 5.04%, but are still in the stock by almost 902,000 shares. And then the largest reduction in percentages was from Alston Capital Management. They reduced their position by almost 1/4 at 23.76%, but even their initial position was quite small, as they are now holding 77,000 shares. Now the addition for Matrix Asset Advisors was quite decent, where they increased it by almost 50% at 47.61, but unfortunately overall the position is not that huge, now at 176,000 shares. So overall Superinvestors seem to be bearish, with more selling of the stock than buying, but at least there is some hope here too. Dodge & Cox currently has the largest position with over 3 million shares, and even though they haven't been buying recently, they also haven't been selling. So it seems that the largest holders are not that keen on reducing on this position. Now, not much to say about insiders. In the last 6 months they did 0 buying transactions, but they did sell 2 times, valued at around $707,000. So not much to gain here, as insiders have only been selling. Now the last part I want to check is the price chart. So this year the stock reached the highs of $114 per share back in 21st of April, and after was continuously going lower. On the 29th we saw the stock dropping to the lows of $104, right there under the 100-day moving average. There has been 2 days in May, the 17th and the 25th, where the 100-day moving average was tested as a resistance, but that held and we saw the stock dropping again. It seems that we reached some sort of a support on June 16th, with the lows of just under $87, and then repeating that low in a month on the 14th of July at $86.70 per share. But after that the relative strength index started going higher. By the end of the month it reached the 50-day moving average, and we are now right there in between the 50 and the 100-day lines. So the one part I do like here is that all 4 of the moving averages have crossed lower already, so they shouldn't be pushing down on the stock anymore, but there are unfortunately a few points that I don't enjoy. We now have the relative strength index close to overbought at 64, the MACD lines could be taking a turn for the worse, with the 12-day crossing under the 26th one, and the stock is coming close to that 100-day moving average, which have acted as a resistance for a few times already. So I do believe that we could see a pullback in the coming month, and maybe the stock will go lower again to that bottom of under $90 per share. So we did go through all the steps, and now let's make a quick recap of what we found. We saw revenue dropping sharp in 2020, but it is now over those pre-pandemic highs, and overall has been consistently moving higher in the last 5 years. Regarding price to earnings, there were 2 moments in the last 5 years where the ratio was just a bit lower, but looking into it now, it's still on the lower side of what we have seen in this time period. Medtronic has been buying back shares, especially in 2017 and 18, and in 5 years they managed to reduce the number of shares outstanding by around 40 million. Now they also have been consistently increasing on the dividend payout, and with the price going lower this year, the stock is now trading at a dividend yield 41% higher than its 5-year average. Analysts also seem to be bullish, as in 1 year they expect for the stock price to go up from 8 to over 16%. Though there is one negative part, as Superinvestors and insiders have been net sellers of the stock. Now after checking the chart, it looks like it just had a decent run. Relative strength index is way over 50 at 64, the MACD lines are crossing down soon, and we are about to test the resistance of the 100-day moving average. So I would be waiting for the stock to go down a bit, maybe closer to that support we saw at around $87 per share. Now that we've checked into Medtronic, I believe it would be an interesting addition to a dividend portfolio, and in fact I did start a position in it in the beginning of this month. So I'm now holding 3.2 of a share at an average price of $93.41. This position is now up for $6.07, so higher for 2.02%. Now Medtronic is paying an annual dividend of $2.72 per share, which makes it a yield of 2.86%, but since I did buy it just a bit lower, my yield on cost is at 2.91%, and the position brings $8.74 in dividends on an annual basis. So that was it for today. Make sure to support the channel and leave a thumbs up under the video. What do you think about Medtronic? Is it worth picking up for a dividend portfolio? Share your stance or your position in it in a comment below. If you would be interested in getting access to my notes, then consider memberships. By becoming a member, you will get access to Discord, where I share all my Google Sheets documents and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I've looked into several other companies, so if you would be interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.